Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky. And we have Bruce Marshall on the line. He's the income trading specialist for Simpler Trading. Bruce, how you doing on this volatile Friday?
I am doing great. I love these kind of markets.
Tell us why you love these kind of markets.
On the income side, whereas that's where I primarily, use all the trades. I'm obviously trading volatility, and I love it when we get these spikes in volatility because you can set trades that are a lot more, I guess, user friendly is the best word for it. A lot wider, further out in expiration, far away from danger. So to me, it's easy to make money in these kind of markets.
Right, because it's, you can put yourself at extreme levels. You know when you get hit at that level, you're comfortable with the position. You know where your out is. Yeah, and I talked to about it on the show to other traders, and Dennis and I talk about it. A lot of times when the markets get done on like this, and you're thinking, oh, I can't get short this. Throw an offer out there. I mean, people are just looking for liquidity. So I have to agree with you on that point. So. Income. Looking for income. What are you trading? What are you looking at? What's on your radar for today?
Today, actually, in the last couple of days, I have been legging into some iron condors. Basically, selling. I sold some call credit spreads on the way down the last several days, and I started yesterday adding the put side on. I added a put credit spread on the NDX when we were down 100 yesterday. Thought that was pretty reasonable. And if you look at and actually I added one on the Russell too. If you look at the three indexes, you compare the S&P, the Russell, and Nasdaq. The Russell's led the way down, so I think it's probably got the least amount, of free fall below it. So I'm starting to concentrate on that.
All right, explain that iron condor strategy to us a little bit, in a little bit more detail.
Sure, absolutely. Basically, what I like to do is to come in. Normally, you can sell an iron condor 30, 45 days out. In these type markets with the higher volatility, you can go 50, 60, 75 days out, get much, much wider spreads, and again, get yourself further away from the fire. And if it starts going against you, you've got for example, in the S&P or the Nasdaq, you may have 250 points of buffer room, on either side. And so that's what I like to do. And either coming in and selling it as, an iron condor together, or legging in, selling the call side, adding the put side on, that type thing.
So you're just looking at once you put the iron condor on. I mean, is your objective to have it stay within that range and just kind of take advantage of the volatility, the extremes, and just kind of have it contract?
Yes, correct. Right, because what will happen with the iron condor, you have a pretty hefty positive theta. So as long as we stay within a reasonable range, the iron condor is going to pay you. It's going to pay you to hold it. So the longer you hold it, the more money you can make, and you can take it off at any time. An exit's just a commission away. So if you start to get in trouble, you just close it. But as long as we stay somewhat range bound, and that sounds kind of crazy in this kind of market, but again, we're talking about on the S&P, 150 points wide, 200 points wide. So you've got a lot of wiggle room for these things to move around.
All right, we had some volatility with the Fed minutes. I believe that was on Wednesday. It was a crazy volatile day. Ended up settling near the lows here. I mean, I don't know, the Fed speak. What's your take on it? September, December, never. I mean, it just seems right now the Fed's just really backed itself in the corner that it just can't do anything. Anything they say or do seems to be the wrong thing.
Right, exactly what I was going to say. I'm probably one of the, I'm in the minority, I guess, saying that I do not think we'll get a rate hike in September. If you read the Fed minutes, of course, those are from July, and we didn't have China, and we didn't have all these other things, that had come into the picture. So I think, I do not think that we will get one in September. Is that good or bad? It's going to keep us in limbo if we do not get one. People are on the edge of the seat, waiting, waiting, waiting. Um, and I'm looking at this selling the last couple of weeks, thinking, is this selling into? Is this pre-selling? Is when the actual rate hike does happen, whether it's September, December, whatever. Are we going to get more selling? And I don't know. Maybe we're selling into it, and it won't be so dramatic on the downside.
I mean, do you think this is something where we've seen like a major top in the market, a long-term top that maybe we won't see for a new high for 1, 2, or 3 years here, or do you think that the resiliency that we've had in the market will prevail once again and we'll get right back? I mean, now we're getting to the point now here where we're over in the S&P 500. We're over 100 points away from that all-time high at 2026 and a quarter here. What do you think, just for the long-term perspective on the market?
I do think we will obviously go higher at some point. I actually kind of hope for my type of trading. I hope we hope it's a slow grind up, and we stay, range bound. Unfortunately, I think that we might be getting into a more volatile market going forward. And yes, that would be, hitting new highs as we go. I just don't know how, what the fallout from China is going to be because, you got the second largest economy in the world. It's slowing dramatically. It will affect things, but, the U.S. economy is picking up steam as well. So,
I mean, another thing too. I mean, is what's hurting a lot of these larger U.S. companies is the strong dollar. If you raise interest rates, it's going to make the dollar even stronger, and that's going to just have a double negative effect on these issues.
oh yeah, absolutely, absolutely. I mean, and also, if you look at the companies with the large, exposure to China or international markets, which can all get hit if we get into some kind of currency, you know, war. I hate to say currency war, but that is a possibility. So you're exactly right. These large cap, blue chips, they may not fare so well, but I think the strength is there to continue to drive the market higher over time.
Are you using the gold market as perhaps as as a hedge? I mean, we do have gold going. I mean, I'm looking at my screen here, and that's the only thing that's green on the screen here, trading up 370 to 1156.90. Are you using any of the miners or the gold futures at all to kind of cushion the blow off this big decline in the market?
I'm really not. From time to time, I will kind of dip my toe a little bit in, gold and oil. But for the most part, the way that I trade, I use the Greeks, and I manage portfolio, by the Greeks, so I can offset my risk that way. Also, you can. What I like to do is to plant little volatility bombs on the downside that will explode in profit, using the SPX, using the VIX, things like that, that won't kill you if the market doesn't go down. So that tends to work a lot better for me, just managing by the Greek.
Just real
And
quick
that
here,
being said,
we just opened the market here. Could you just I know you got a lot of different positions on and stuff. Could you just kind of in the first early minutes of trading, just kind of what you look at first, looking at the S&Ps or just maintaining your positions? Could you just give us a little bit of insight of your first few minutes of the day?
sure, absolutely. Obviously, I'm watching the futures, pre-market. In the first couple of minutes, obviously, I just kind of sit back and watch to see if we're going to settle out, if this thing's going, if we'll pop back up. But for the most part, I watch the Greeks. I watch my P&L if I have a position one way or the other that's not acting right. I'm already proactively or preemptively looking at how I can defend that position or have put a counter trade that's going to offset that. For example, if the market keeps going down today, maybe I'd put a bearish calendar on the downside, using SPX puts. something like that. But for the most part, I just sit and watch. I'm always watching the volatility. I see the VIX up $3.50 right now. We're over 22. That's pretty impressive. We were at 12 not long ago, so we've had quite a move in the VIX, which again I like. But it is. I think of it as when I'm looking at the Greeks, it's my dashboard of gauges. I'm looking at the VIX. I'm looking at my deltas. I'm looking at my theta, my vega, especially in a market like this, because you can fine tune that up and down, and again reduce your risk that way.
We're on the lows of the pre-market session here. I believe we had a low at 0775. We just ticked 0750 here. So if you were looking at the pre-market low as an objective there, we just hit that. Got a little bit of a bounce, not much here. Just a little bit more, Bruce. You said you like to look at the Greeks, and we know that all the Greeks are associated with options. Could you just go over? I mean, I think you mentioned the theta. Could you just go over those a couple real quickly, and how what they mean and how you use them in your trading?
Sure, absolutely. Primarily, you've got four main Greeks. The one that I really concentrate on is delta, and delta is your directional risk. So you can compare that to the S&P, and for example, if you have a position that is long delta, you want the market to go up, and you will make money. If you are long delta and the market goes down, you will lose money. So you can dial up or down your delta, which is your directional exposure, by hedging a position, by adding if you've got long delta, you can add a short delta position. On the other side, for example, the theta is the time decay of the options. And this is the beautiful part. You can put a trade on, and overnight it will make money if you have positive theta, right? That's the beauty of the income tax trades, is that you don't have to pick a direction. And that's, to me, is kind of key. I really don't care so much if we're going up or down. I can still make money either way. And, again, the key to me is managing by the Greeks.
We've been on the line with Bruce Marshall. He's an income trading specialist for Simpler Trading. Bruce, just any particular issues? I know you look at a lot of things in the broad market. Just any particular stocks that you think have been beat up and perhaps a little overdone here? Maybe you'd be looking for an entry on the long side.
Sure, absolutely. I don't know if I don't know if you could hear my the little bell just ding a second ago. I just got filled on an Apple put diagonal, which is a kind of a little hybrid strategy. But I was looking for Apple to go to 109. I think we're at 111 right now. My order just filled. I think, and I've got room on this particular trade all the way down to 102. So I've got quite a good bit of buffer room. But I think Apple may be overdone on the downside here. Now, that's assuming the market kind of firms up. And it looks like we're kind of turning around here. ES is only down 12 now from 17 a minute ago where we started.
Right.
So, I spend a lot of time in the indexes too, again, the NDX, SPX, and the SPY, IWM. I'm really starting to look more and more, not so much to get bullish, but for example, maybe sell some put credit spreads further below where we are right now. That's my way of getting bullish without getting too directional.
Right. Could you just explain, the legs that you got filled on in that Apple trade, and you said you have it, exposure down to 102. Could you just walk that through us real quick?
Sure. This is a beautiful trade. I sold a September 105 put. And then I bought, now this is a simultaneous transaction, but I sold the September 105 and I bought the October 100. So what that does, it's similar to a calendar, but I'm selling the 105 and I'm buying the 100, but I'm doing the selling in September, the buying in October. And I actually got for those that haven't done this before, I actually got a credit. I bought that trade and I actually got paid. A credit of 12 cents to take that trade. So it's kind of a good thing when you can buy something and get paid to buy it. I love these kind of trades. And basically, what it will look like. Again, my downside break even is at a little below 102. It's about 101.75. And I have no risk on the upside. So if Apple turns around and just rips to the upside 30 points, I have zero risk on the upside. As a matter of fact, I will make, at the very upper end, I will make the 12-cent credit on 10 contracts is $120. So I will actually make $120 all the way up to infinity. But what I'm looking for the trade to do, if it sits right where we are on this trade, now I did 10 contracts and it's 5 points wide, so it's $5,000 in margin. But if it sits right here, I'll make about $1,000 just within a point or two or three here or lower. I'll make more and more money.
Okay. All right. We've been on the line with Bruce Marshall, income trading specialist for Simple Trading, going over the Greeks, going over a trade that he just got executed on here. So we'll be following that into the future. Bruce, great information. Thanks for coming on, and we'll have you on again soon.
Great. Thanks so much. I really appreciate it.
All right.